Bitcoin is a less stable store of value than gold. And if one is just looking for stability, as many of my older clients are, they're pretty much heavily invested in gold. But what I would suggest to them is that, having zero Bitcoin is crazy because the optionality and the asymmetry in Bitcoin is so substantial that even a 1%, 5%, or 10% allocation, over a 10 or a 20-year time frame. I mean, if I'm correct, I believe Bitcoin will 10x in the next 5 or 6 years. And I think in the following 5 or 6 years after that, it will 10x again. So if that's the case, and you had a 1% allocation to Bitcoin today, it would become, all other things being equal, 10% in 5 years, and then it would become 100% in 10 years. And that's, most people can afford to lose 1% of their portfolio.
Volatility scares a lot of people away from Bitcoin, but Lawrence Lepard, founder of Equity Management Associates, argues it's simply part of the adoption curve. He compares it to Amazon. Before becoming the world's dominant marketplace, its stock collapsed multiple times. Bitcoin has seen similar 50% drawdowns and could see more, but that doesn't erase its long-term trajectory. Lepard says the way people measure value creates a distorted picture. In dollars, Bitcoin swings up and down, sometimes violently. But one Bitcoin is always one Bitcoin. The real uncertainty lies in the dollar, which steadily loses purchasing power. For those who care most about stability, gold remains the safer bet. That's why it continues to appeal to older investors who want to protect their wealth without stomach-churning volatility. Still, the bigger picture shows that investors who dismiss Bitcoin or gold as too late are missing the point. Most retirement savings are heavily concentrated in stocks, which are expensive by historical standards. Meanwhile, both Bitcoin and gold are benefiting from growing distrust in fiat currencies. People regret not buying Bitcoin at $5,000 or gold at $300, but Lepard reminds them that the opportunity is still enormous. Out of roughly $900 trillion in global financial assets, gold accounts for about $20 trillion and Bitcoin only $2 trillion. That's a tiny sliver of the overall pie. If even a modest portion of capital shifts into these hard assets, the upside is massive. In Lepard's view, we're not late, we're still early. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Yeah, it's a weakness of Bitcoin. There's no doubt about it. I mean, it's a very volatile asset. It's had multiple drawdowns of over 50%, and they could occur some point in the future. But I think that's very typical of any new sound money in the process of adoption. I like to say we're trying to put the ocean into a swimming pool, and we got to grow the size of the swimming pool. And so very much the way that Amazon bounced around, had multiple 50% drawdowns, but went on to become the leading online seller of goods and services. Bitcoin, I think, is going to become a leading, if not the leading currency. But in dollar terms, it fluctuates quite a bit. Now, I'd flip that on its head and say Bitcoin's quite stable. One coin's one coin. These dollars, boy, who knows what the hell they're worth. Sometimes they're worth a lot of Bitcoin. Sometimes they're not worth much at all. So, you can kind of turn it on its head. But there's no doubt that Bitcoin is a less stable store of value than gold. And if one is just looking for stability, as many of my older clients are, they're pretty much heavily invested in gold. But what I would suggest to them is that, having zero Bitcoin is crazy because the optionality and the asymmetry in Bitcoin is so substantial that even a 1%, 5%, or 10% allocation, over a 10 or a 20-year time frame. I mean, if I'm correct, I believe Bitcoin will 10x in the next 5 or 6 years. And I think in the following 5 or 6 years after that, it will 10x again. So if that's the case, and you had a 1% allocation to Bitcoin today, it would become, all other things being equal, 10% in 5 years, and then it would become 100% in 10 years. And that's, most people can afford to lose 1% of their portfolio. They lose a lot more than that doing other stupid things. So, and the book says, and I strongly believe, Michelle, that the average person, I mean, I was writing the book actually for the average American. Most of them have all of their 401k in the stock market, which, by the way, right now is not cheap. I mean, your conversation with Chris Irons at Quote the Raven really explored that in great detail. And I love that conversation. And it's kind of like, guys, we're in a monetary crisis. I mean, we got gold going up like crazy. We got Bitcoin going up like crazy. And, you need to think about having some of these sound money assets. If you don't have 20-40% of these sound money assets, you're going to be really sorry that you don't. And let me just describe a problem I'm seeing a lot with people I talked about now, because I'm starting to get phone calls like, hey, you were right. Gosh, Bitcoin's done well. Gosh, gold's doing well. Gosh, I want to get in, but it feels like it's too late. I missed it. You bought gold at 300, you bought it at 1,000, you bought it at 2,000, you bought Bitcoin at 5,000, whatever. You bought it a lot cheaper. It's too expensive. And I flip that on its head and I say, look, guys, let's just use a metaphor here. Let's say fiat currency is the Titanic, okay? And it may not be. It may not be going down, but it's got some of the same characteristics. And okay. And let's say gold and Bitcoin are the lifeboats outside of the Titanic, right? They can't print it. And so, yeah, I bought a seat on the Titanic at $300 when I bought my first Bitcoin, and I bought a seat on the Titanic at $300 or a seat on the lifeboat when I bought my first gold at 300. And I've been buying them all along. I paid much higher prices over the years. Okay, so now the seat to you is 3,500 for an ounce of gold, and 112,000, or today it's 108,000 for a full Bitcoin. You don't need to buy a full one. You could buy 10,000 or five. You buy whatever fraction you want. So that's a higher price, but do you want the seat on the lifeboat or don't you? Would you prefer to stay on the Titanic? And so, again, it's a metaphor, and I'm not 100% sure that fiat currency is going to completely fail, but it sure seems to be sinking. So, to me, that's again why I wrote the book. I just want people to be aware that we are in a situation where sound money is really becoming quite important. And actually, I don't think we're that late. I mean, if you go out and you look at all the financial assets, the $900 trillion of financial assets out in the world, gold is 20. So what's 20 over 900? That's a small percent. And Bitcoin is 2 trillion out of 900. It's like 0.2% of 1% of all the assets. So, I mean, we got some room to grow here. They can go higher.
Lawrence Lepard points out that the United States holds an outsized share of the Bitcoin network, with estimates suggesting around 40% of the world's supply is in American hands, whether through individuals, corporations, or ETFs. China, by contrast, is thought to control about 100,000 coins, while the U.S. government itself may hold closer to 200,000. The exact figure is debated, since much of it comes from seizures tied to criminal cases, but the implication is clear. The U.S. has far more strategic exposure to Bitcoin than many realize. On the origins of Bitcoin, Lepard rejects the theory that it was created by a government. He believes it emerged from a group of cypherpunks committed to building an independent and censorship-resistant form of money. He even suggests he may personally know one of the individuals involved. As for the million coins tied to Satoshi Nakamoto, Lepard argues they're unlikely to ever move. Combined with the 10 to 20% of coins already lost forever through misplaced keys, the true circulating supply is far tighter than the 21 million cap implies. Let's get back to the interview.
Nobody knows what the right solution is, but thank God we have an administration that understands that the problem exists and that understands that these are the two solutions. And so how they march forward and how they implement it, we can't predict. We don't know. But we do know this. We do know he's been willing to do bold and risky things, and he's not afraid to take chances. And he might be, aware that if he has a very inflationary period coming up, that the odds of Vance winning are slim. And one thing that's also interesting and true is that the president actually has the power to do these kinds of monetary things. I mean, if you think about the Constitution, it really said that, Congress could, was controlling money, so to speak. I mean, only gold and silver could be money. That's in the Constitution. But since that time, the executive branch has really kind of grabbed the mantle on it. So, basically, Lincoln started when he printed greenbacks, and then, Roosevelt did it when he grabbed the gold and revalued the gold. I mean, the reset we're talking about, by the way, really kind of echoes what Roosevelt did. I mean, we're in the middle of a depression. We were experiencing massive deflation. Gold was overvalued, and so he devalued the gold. He grabbed all the gold and he devalued it. And so, and then Nixon too, when he came along in '71, he just took us off the gold standard. So we've got precedent for the executive branch taking bold action. And I hope and pray that they actually will take bold action before we spin off into, the kind of hyperinflationary shit I was talking about before, because that would obviously be, a dreadful way to go through this transition. But, it's clear that I don't think they have it all figured out. I mean, I think Andy is really on target when he says a good way to start would be gold-backed treasury bonds, see how that goes. And, thankfully they've got another 3 years to play with it. But I'll say this, I mean, boy, doesn't it imply that, I mean, what's going to happen with these assets is just going to be something else, right? I mean,
Yeah.
I mean, there are two other charts I want to show you that I really think are very, very powerful. I believe that about 40% of the Bitcoin in the world is in the United States when you consider private individuals as well, and corporations and ETFs. I mean, there've been some studies that have shown that. So, and I think China has 100,000 Bitcoin. I think we have roughly 200,000, although there's some debate about that. The the customs service or the sheriff's service, whoever holds the Bitcoin said they held a lot less than all the 200, but we're hoping the 200 is still there. Let's assume it is. I don't think Satoshi Nakamoto is the government. I think this was cleanly developed by a bunch of cyberpunks who wanted a sound form of money. I think I actually know one of them. He's still alive, nice guy. And I don't think it was one person. I think it was a group. I think they recognized the disruptiveness of this thing, and so they just decided to kind of keep it quiet. And I don't think the million coins that Satoshi owns will ever move. I also think that we've got 21 million coins. Probably 10%, maybe 20% have been lost, so it's less than that. But the intriguing thing, and I'm not gonna say I know the answer to your question, Michelle, but the intriguing thing, and it's been posited by some, and it may not be terribly far-fetched, is strategy a front, MicroStrategy, Michael Saylor, is that a front for the United States government? And, I can't disclaim that I know one way or the other, but there are certain parts of the pattern that mean it's a possibility. I mean, he pivoted hard into Bitcoin right around 2020 when Lowry was developing his thesis. We know, and I know because my partner David Foley met with Lowry and heard him say that the people in Washington, D.C. fully understand how important Bitcoin is strategically to the health and economic security of this country. And then suddenly you have a guy who, he lives in D.C., has done a lot of work for government agencies, grew up on Wright Pat Air Force Base. His dad was an Air Force officer. He went to MIT on an Air Force scholarship. He was ROTC. He got out. The DuPont family backed his first business only a handful of years outside of MIT. I mean, and these big families, as we know, are connected to the CIA.
What becomes increasingly evident is that Bitcoin's story is no longer confined to price swings or speculative fervor. It's about power, positioning, and influence in a shifting financial order. The concentration of coins in American hands, whether through companies, funds, or government seizures, underscores how deeply tied the asset has become to questions of strategy and security. Add to that the lost supply, the coins unlikely to ever re-enter circulation, and the scarcity narrative only grows stronger. Meanwhile, corporate actors like MicroStrategy blur the line between private initiative and possible state interest, suggesting Bitcoin may already be woven into larger geopolitical considerations. Gold still holds its timeless place for those seeking calm in stormy markets, but Bitcoin's role as both an alternative and a challenge to fiat frameworks can't be ignored. The intersection of scarcity, distrust in currencies, and institutional involvement signals that we are not at the end of this story but at the early stages of its global redefinition. Will the growing concentration of Bitcoin in U.S. hands become a long-term advantage in shaping the next financial era, or could it trigger rival powers to accelerate their own strategies for digital and hard money alternatives? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.